Good afternoon, everyone. Thank you very much for being here with us. This maiden quarterly presentation of woodbuffalo Economic Digest by AFCOT Associates. My name is Joshua Gogo, and I will be making the presentation this afternoon, and thank you so much for being with us. We are really encouraged by your support, everyone that is here. We're really encouraged. So to begin, a little bit about this presentation and how we are going to go about it, and who we are and what use it is. I would like to just say that because the presentation will take place virtually, or is taking place virtually, if we could have our questions typed out so that after the presentation, there's a period of questions and answers and conversations and clarifications. So we go through the presentations and then look at the clarifying questions. So I would like to start off by introducing ourselves as we go on. So my name is Joshua Gogo, and this presentation is the first of a series of presentations on Economic Digest, on the woodbuffalo Economic Digest. The woodbuffalo Economic Digest is a production, it's a publication of AFCOT Associates. So this presentation will make it short. Who we are, so how it will go, I will say a brief things about who we are, what we do, why we are making this publication, then talk a bit about the publication, the potential users in the community, and data partners, and then I will share some of the recent work we've done that we go into the first edition of the pilot publication. A little bit about me. My name is, again, Joshua Gogo. I came into the community first visiting from 2013, and then I visited until I finally moved. Just before the fire in 2016, I came. I'm an engineer by training, an economist and a financial analyst, also a computer scientist. I have over 25 years of experience in economic research, finance, risk, market, and quantitative analysis in strategy and planning. So recently, in 2020, I was also featured in the 2020 Top 100 Canadian Professional magazine. I have a PhD in economics, and I'm also a fellow of the Canadian Securities Institute and a chartered investment manager. So my experience over the 25 years started as an engineer in the oil and gas sector. So for me, woodbuffalo is home. I have both engineering and economic experience and understanding of what the oil and gas sector is about and what it is. What AFCOT Associates currently do, what we do, we do a whole lot of economic finance and quantitative analysis and research. We do a whole lot of risk and cost control. We do litigation support to the extent of valuation, asset rationalization, bankruptcy support, and also expert opinions. We help resolve financial dispute resolutions. We do a lot of that, and financial negotiations. We support both government and companies to access international markets. So by working through international trade agreements and coming up with plans and strategy for communities, countries, and businesses to access foreign markets, taking advantage of these trade agreements. And we support a whole lot of strategy and planning. That's what we do. Now, what is the motivation? What is the motivation for this publication? For us, personally for me, the motivation is to provide primarily an independent and objective analysis from an economic and finance perspective of the woodbuffalo economy, to look at the critical elements and indicators of the economy and report on them through a robust understanding of the regional economy and carrying out granular economic research and analysis to report on certain key indicators of the economy, first to help organizations in the region, critical stakeholders in the region, be they development planners, organizations, businesses, and the social sector, and to support regional development using this independent and objective view and analysis of the economy. So what are we going to be looking at in the Woodbuffalo Economic Digest? First, we'll look at now this list is not in order, but they are the things generally we will be looking at to publish, to analyze, and to communicate to critical stakeholders in the community, in the region. First, real estate. There is a whole question about when do you enter the real estate market? What are the real estate key indicators? Why is the real estate market behaving the way it is behaving? And what are the investment opportunities, the cap rates in the market? We will also look at the inflation of key goods and services in the region. And we will do that because generally inflation is reported across Canada, but our observations are that the key inflation in the core inflation really in Woodbuffalo is totally different from core inflation in Canada. That is because of the peculiarities of our economy. So in order to report the actual inflation, we have to find a way of understanding our actual inflation and dislink it from the inflation that is reported by the Bank of Canada or StatCan for the whole of Canada. We will also be looking at small business index. The small business index really looks at the health and opportunities for small businesses. What is going on with them? How are they, what are the opportunities in the small business environment? And for planners, as an indicator to help measure and track planning and strategic objectives. We will look at the airport, specifically the Fort McMurray Airport, and see how how the usage of the airport is. We will use this information to support strategy and planning by stakeholders as a gauge to what is really going on in the economy. What is really going on in the economy. And then gas prices. Gas prices are one of my favorites. Sometimes I amuse myself that how is it that the gas prices in Fort McMurray don't change the way the oil prices change which is the usual thing with gas prices across the free market world. Then we will look at the resource sector index. A good friend of mine in this currently listening on, it said Fort McMurray is a one-horse town, but everyone looks at the oil prices. Generally, we observe that while the oil prices are important to the Fort McMurray community, and they are very important, but from the oil prices, there is a component of the oil prices which we have brought out to look at as the resource sector index. More important than the oil price, the oil price is generally available to everyone, is the health and performance of the companies, the resource companies that actually operate in Fort McMurray. So the resource sector index looks at the health and profitability and the performance really of the resource sector, the industry players that are actually present in Fort McMurray. So this is what the resource sector index measures. And then, so that is what we will now use to understand a whole lot of the other indicators. We will also be reporting on the supply chain disruptions. For instance, today, just recently, we just heard the President of the United States, President Joe Biden, signing an executive order to shut down the pipeline, the Keystone pipeline. Now, that is a major supply chain disruption for the industry in Woodbuffalo region. Now, what does that mean for small business? What does that mean for the region? What does that mean for the health and performance of the resource sector in the region? This is why we want to track and report on such major supply chain disruptions that will affect the region. And then we will look at major projects in the region, both by the municipality and by the province and by the industry. And because it is, and when we look at the importance of major projects, we will see how it affects every other thing in the region. So we will report on that. Tourism index. Tourism is now a big thing for some of our critical stakeholders. So, and it has been, tourism has been identified as one of the key things that the region will invest in going forward. So, talking with some of our stakeholders, we found out that finding a way of tracking and measuring how tourism is doing and what could be done and how it impacts other elements and areas of the economy will be important. And some of these indexes, and then youth retention index, how well are we retaining youth? Given that building a city, building a community is critically dependent on how well youths are able to be attracted and retained in the community. Now, some of these indices, I will talk further with the critical stakeholders to understand how they want to look at them, what they want to measure, and then what we will be doing is to get the information, the economic data, to be able to construct them in a way that they become meaningful to the critical stakeholders. For instance, real estate. We would like to talk with the real estate community to understand what is important to them when it comes to knowing real estate investment, when to enter the market, when to leave the market. So right now, we're looking at cap rates, operating income, and then making them effective for decision making. So these are some of the indicators, economic indicators we'll be looking at and we'll be publishing in the Wood Buffalo Economic Digest. Now, who are critical stakeholders that we're looking to engage, and we think we'll find this publication very useful besides the general public? One will be the government and the government agencies, both for developing strategy and planning, for performance measurement and tracking, and for stakeholder communication. Another group of stakeholders, businesses and entrepreneurs, again, for strategy and planning, as a source of information for strategy and planning, for investment decision support, and business decision support, whether for developing business plans or deciding what business to enter, or making decisions for the health and the profitability of businesses. Industry stakeholders, we also expect to make this publication useful to the industry stakeholders, members of OSCA, basically to support their socioeconomic development planning, to support stakeholder engagement and communication, and to support the measurement and, of the performance of their social investment. And then the not-for-profit sector too, we find this publication very useful in their strategy and planning to track and measure performance and to support decision. Now, these are some of the stakeholders that we think we find this publication very useful. This list is not exhaustive and it's not in order, but these are the stakeholders that readily come to our mind when we are thinking of, when we thought about publishing this and how useful it would be for them. So let's look at the publication a bit in detail. Some things that we will just present now, some of our research, some of the work we've done so far that will be in the first edition of the publication. We'll look at the resource sector because it forms a critical part of the publication and it affects a whole lot of the other indicators. So I'll make a big presentation on the resource sector index, and then the SME index, some of the input to the SME index, and then our airport, take a look at the airport usage. Now, I want to do a bit of the presentation on these three, only these three because of time constraint, and it's just a peek of what is the quality and the quality of the presentation, the quality of our work, and what the type of information that we're looking at. Now, what is the resource sector index? Basically, the resource sector index measures the health of the industry players in this region that have assets and are producing from this region. It looks at a critical indicator of their performance, and then designs an index that reflects the incentive of investors, and shareholders in those companies. So it has a baseline period that we have set for 1st of January 2011. And it asks the question, if I were to invest, if someone were to invest $10,000 in the resource sector in Wood Buffalo, operating in Wood Buffalo, how would that $10,000, what would be the return on that $10,000, and how is it moving over time? at any given point in time, it will ask the question, should I pull out my investment from this sector, from this industry, from these companies, or keep it? And so you can see that because the motive of the investors in the resource sector is the value of their investment, we want to bring out that first and foremost and present it that, say, in as much as the oil prices are moving, this is the incentive or the incentive structure facing investors in the resource sector that is present in woodbuffalo. And at any given point in time, this is how their investment is doing. This is how well they are doing. So if you look at this index, then you'll find out that it peaked at a point of around 2013, 2014, when oil prices are also at the peak. It has two averages: the 13-month average that looks ahead 13 months down the road and looks at the behavior of the performance of the sector in this period, and it has a 3-month average, moving average, which is the short-term period. Now you will see that the importance of this is that it helps in gauging what is going on with the industry in 3 months and in 13-month period. And it helps us also to forecast what is going to happen with other sectors and other areas of the economy that would depend on this resource sector, whether it's real estate or small businesses or tourism or every aspect of the economy that depends on this resource sector directly or indirectly can be understood from this index. Now, this is 2019, for instance, where it was. In 2016, you will see that the short view is now way below the medium-term view, that is 13-month view. So one will say you can invest in the industry because it will come on. Now, currently, in 2020, at the end of 2020, we're at this point. The question becomes, will the industry continue to invest or not? Which is also an indirect question to regional planners. What is going to happen in the region if the industry invests or not? So this is one index. The questions that will arise from this will be, what might this mean at any given time for small businesses? What does this index mean for real estate investment opportunities, investors, and regional planning? These are some of the things that we will analyze and form a forecasting sort of opinion on in the economic digest to analyze this further, these questions further. And we will also like to talk with the stakeholders on what this index means for their planning and strategy. Now, the second index is the SME index. Again, some of the things that we will be looking at in the SME index, which basically will gauge the number, adequacy, sufficiency, health, and profitability of the small and medium businesses that operate in the region. For instance, currently, we know that the number of businesses per $1 billion of major projects in the region has been increasing, and it increases. The number of businesses increases with the amount of money spent in major projects. We know that, but what does this mean? As shown in this curve, what does it mean? But we also have seen from the data that the number of businesses per $1 million of family income has been decreasing the last 20 years. Why? Why are businesses increasing by the amount of money spent in major projects, but are decreasing over the time, even with that's per $1 million of family income? What does that mean when it comes to the type of businesses we have? Some of the questions will be, does it mean that businesses are not responding to the families, than the family demand, and are focusing on the major projects? So what does that mean? Because we also see that in the data is telling us that the number of small businesses was increasing per 1,000 population, but now in the last 10 years, it started decreasing. We are starting to see a decrease in the number of businesses per 1,000 population. Why? What is the reason for this? It's a question that will help planning for either investors and entrepreneurs or for regional development planners interested in the development of small and medium businesses. Together, we realize that we have less number of small businesses than we should have compared to the family income, the population, and other regions like Grand Prairie, Lethbridge, Edmonton, compared to their family structures, their family income, and the population. We have significantly less businesses than we should have. Why is this so? How do we explain this? And what can be done to correct this, so that at least we will have comparable number of small businesses as given by our population, family income, and the size of the economy. However, if you look at the health of businesses, the health of small businesses, we find that there is an increasing a decreasing rate of failure rate of businesses. The rate of failure of businesses is decreasing over time. Now, this does not mean that businesses are not failing. Why? You have to look at what is going on between the number of businesses and the resource sector index. They follow the number of businesses we have in woodbuffalo. Follow. In fact, if you look at this, it's as if it's a mirror image of the woodbuffalo resource index, which means that as the resource sector is doing well, the number of businesses increases and falls with how well the resource sector is doing. Now, it tells us another thing. It tells us another thing. Now, if you look at the number of incorporations of small businesses, the failure of small businesses, and the resource sector index, that is how well the resource sector is doing. Again, you see a mirror image, but I'm going to explain something that is counterfactual. Now, this peak is where the wildfire was. Now, you find that because the number of businesses are increased or fall with the resource sector, and over the years, the failure rate is decreasing. It means that the businesses left, that's what we call the survivorship of businesses, right? As businesses are failing, the ones left fail less because they are the better ones that are resilient, that are surviving the hardship. Now, what does this mean then for planners who are trying to support small businesses? What does it mean for the number and type of businesses left. What does it mean for resilience? Does it mean that the businesses currently existing, and because the failure rate is going down, that they are getting better and getting more and more resilient? So how can we use this? That is the practical question for planners, for investors. And what type of businesses are surviving? What type of businesses are surviving? So those are the questions that some of the questions that we will ask and answer for wider economic resilience and small businesses, the type and number of small businesses that should be or are there or are going to be. A third economic indicator of the health of an economy is the usage of the airport and how healthy the airport, how well the airport is doing in the city. Now, one thing that we have seen, we have observed is that the turnover of the airport, turnover here means how many times the airport is able to fly the entire population of woodbuffalo in a year. That is, you look at the passenger flow rate, the number of passengers per year, and you ask the question, how many people live in the region? If the airport is flying this number of people, then how many times are they able to fly? How many times have they been able to fly the entire population, which is the turnover? We find out that around 2013, the turnover rate was 16 times, but that rate is been decreasing ever since to 8 times. It has halved. That is, either people are traveling less or they are using the airport less. Why? Why are people using the airport less? Or why are they traveling less than they were? And why is this number decreasing continuously? And what does that mean for the airport? The other measure that we're looking at is the share of the Fort McMurray Airport when it comes to the entire flying population in the region, in the province. So we're looking at just the domestic travel in the province. We find out that while our population is not going down as much as, and in fact, in recent times is now increasing, our share of the passenger traffic in the whole of the airports in Alberta, in the province, is decreasing. It increased to a peak in 2013. Of course, there is a high of the oil prices and the resource sector index, but it's been consistently decreasing since 2013. What does that mean for the airport? What does that mean for the region? What does that mean for businesses and individuals in the region? These are some of the questions we will begin to look at and ask and form opinion on, and also work with stakeholders to understand them better. So if you look at the total passenger traffic, now this is the wildfire time. So you'll find out that the traffic is decreasing over time. It has been decreasing over time. Why? What can be done? And what are other indicators that will tell us what could happen and why it's happening? Of course, look at the passenger traffic through the airport and the resource sector index, how well the industry is doing. It's a mirror image. Besides the 2016 wildfire that affected the airport by so much, but not the industry by as much. It is really a mirror image. So we can ask then, what is the implication, and how can we at least put a wedge in a way that the airport more reflects the population rather than the resource sector? And we can ask a whole lot of questions in the supporting strategy for the airport management and other stakeholders. So those are just the three of the indicators we will be looking at. And we have other publications, but as far as the woodbuffalo Economic Digest is concerned, those are three of the indicators. So what are the next steps for us? If you like what you've seen, and and to also discuss some of the other indicators, subscribe to the quarterly publication and then the quarterly presentations. Send us an email, and let's have a conversation on how we could design some of this index to support the strategy, planning, vision, and strategic objectives of the critical stakeholders and the region. We would like to also have meeting to clarify and discuss this further, and some of the indicators and the publication further with the stakeholders. This presentation has been designed to be short so that we can just go through it and bring out some of the highlights, some of the things that the digest will be looking at. And so, yeah, thank you very much. And this is where we will end the presentation, and we will then open the webinar for conversations and questions and clarifications. So please ask questions at this point. Thank you so much.
Hi, Josh, Diana D'Souza. Can you hear me?
Yes, I can hear you, Dan. Yeah, can you hear me?
How are you?
How are you? Yeah, good. Yeah.
A quick question. Well, I actually have two questions. The first one, though, from the small business side of things, and I mean, the indicators definitely show us the trend and will tell us how businesses are doing from a small business indicator perspective. Was there any consideration, or is there any opportunity to include indicators like ease of doing business?
Yes.
Permitting and some of those other things that we're hearing so much about that businesses are challenged with?
Yes, Dan, thank you very much for this question. Now, if you look at the small business index, what we have done is to use the data that we can currently obtain. Now, much of what we are doing is data driven. Why we have highlighted the stakeholders as also data partners is that we hope that when we engage them, they will give us sufficient, they will give us data for us to be able to analyze. For instance, the ease of doing business, the bankruptcy, why businesses are failing. Right now we see that they are failing, and it's related to, we can see that there's a relationship between that and the resource sector index. But when we plan to engage the regional municipality office to get as much data as we can. We will also engage the woodbuffalo Economic Development Corporation to give us much of the data that they are able to get from their stakeholders and the community officials also to give us their data. Then when we bring all this data together, we will enrich the SME index, one, for the health, second, for the reason that is happening. And one of it, hopefully, we capture some of these things you're talking about, the ease of doing business.
Okay, so the other question I have is the Nichols report and the community indicators that are normally done by, I think it is Oscar. Have you seen those?
Not,
and are you okay?
Actually, I've not. This is just this presentation. I plan to bring together the stakeholders. Oscar is one of our critical stakeholders because the resource sector index is anchored on them, and they do a whole lot of socioeconomic interventions, social investment. And so what we intend to do is to engage them also to get some of their data to make the index helpful to them, and to also use the data to enrich the indicators to support other planners, investors, the development corporation, the airport, and all the non-for-profit, and in fact all the stakeholders, to make it available to them to support their planning.
Awesome, thank you. Great work.
Thank you very much, Diana, for coming.
Hi, Joshua. It's Kevin.
Hi, Kevin. Thank you for coming.
Yeah, and thanks for hosting this webinar. Honestly, I think I know everybody on the webinar, so that's probably a good thing. So the thing that I find is particularly interesting, and for those on the webinar, I was delighted to see the initiative that Joshua put forward to put this forward as a pilot. Our particular interest is in the areas of business retention and expansion, and also in terms of business investment attraction. So obviously the much of the information that's been presented could be targeted to each of those two groups in terms of supporting their decision model, and that's one reason why I've invited Lisa and Tracy on this webinar as well. So the point that was made earlier around the Nichols report that Oscar is undertaking, I think it's well taken. We'd gladly assist with that introduction and access to that information. And also for this group, I wanted to share that we are undertaking a regional labor study, which is currently underway, which would also be a very useful input into this digest. And ultimately this year, and not ultimately, in fact, imminently, we're embarking on the 5-year economic development and tourism strategy, of which we'll be seeking many data inputs to assist us with developing that strategy, basically to help us to figure out the path and plan to emerge post-pandemic. So we have a current strategy in place that is serving us quite well that we put in place just over about 2 years ago, and that was meant to carry us through to around this time. And with the pandemic, that's has presented us with the opportunity to take a pause to think through what should be in the next 5 years. So everybody on the call should be expecting our come knocking, asking for assistance in the development of that plan.
Well, thank you so much, Kevin. I know that you've been a great supporter of this, and yeah, we look forward to really supporting with the research and the input, and also to develop, for instance, the tourism index and other development index to support, to measure and track some of your strategic objectives, so that you can see what's going on in the economy as you plan and move forward with your plan.
Yeah, and Joshua, I also see a lot of value for obviously small business owners and leaders particularly from the real estate side, but also the small business sector. So I'm delighted to see both Diana and Colin on the call. We're a select group, but it would be great to figure out ways to have this accessible to a much larger audience. Love to talk about that too.
Yes, thank you so much. Thank you so much. For instance, Colin, the real estate guy here. If you look at the resource sector index, the question becomes, when do you enter the real estate industry? When do you enter the market? When do you leave the market for short-term investors, for long-term investors? When is a buying and holding opportunity? You'll find that what we intend to do is to create an index for the real estate sector based on the cap rates and the value, and make that available. And as Kevin has said, to make it widely available to investors, not just within the region because it's real estate, but also to communicate it to investors outside when it's time to enter the real estate market. For instance, right now, but how do we communicate that? One of the, that's why we also want to use and develop index for the real estate sector and general the investment climate of the region. Hello, is there any other question? Any other conversation?
I guess my only one might be Diana here. A comment to as you further develop it and you get more information and you build it out. There's a lot of what we would call lagging indicators. It would be great to see maybe an identification of what's leading economic indicators versus lagging.
Mm-hmm.
And maybe as you develop them out, we get some of those. So act in front sometimes rather than based on the outcomes. Yeah.
Exactly. For instance, one of the key reasons we have developed, really, let me just share this. One of the key reasons we have developed the resource sector index. It is so powerful as a leading indicator that you'll be amazed. Let me show this. We were amazed when we eventually, that's why I kept bringing it up with the other indicators, right? How it helps identify what direction the other indicators will go. For instance, if you look at in December here, if step back to 2011, you find that anytime the 13-month moving average is above the price, the resource sector index, anytime the 13-month moving average of the resource sector index is above the resource sector index as built out from the oil price and how well the industry is doing, there is a tendency for the resource sector index to continue to go down. So this is a leading indicator, seeing, as you will say, 13 months out, right? And you find out that anytime the 3-month average is above the 13-month average, there's a signal that the 13-month average is going up, will be going up. So if the short-term indicators you see are behaving in one way, you find out that the one reaching out 13 months ahead, you can infer what it is doing, what it might be doing. Now, again, I want to put this as a disclaimer that no part of this presentation is an advice, a financial or investment advice. It's just for the purpose of education and conversation. So Diana, looking at these indicators, yes, one of the core objectives is to bring lagging and leading indicators, because it's the leading indicators that will help planners, and is the lagging indicators that will also help strategies to ask the question, are we on the right path? But the leading indicators will help planners and indicators to begin to ask the question, what are our next steps? What should we do next, right? So yes, thank you very much for bringing this up.
Thanks, Josh.
Yeah. So any other question? Okay, I have some. So I guess we've come to the end. If there's no other question, we've come to the end of this launch presentation. I'd like to thank everyone for this support, this wonderful encouragement. It means a lot to us, and we'll start the engagement process with the stakeholders to better understand what they will want, what they would like to see, so that this will reflect, really will be useful for them, for their planning, for the general investment community, or entrepreneurs and the general public. Thank you so much.